Hi guys, welcome to another video, and in this particular video we're going to talk about this very important topic called inflation hedge. This is getting more and more important in this year's context. Okay, so before we get started, I'll dive a little bit into what is inflation, because if this is the first time you hear about this keyword, it's important that you understand what it means so that you can fully appreciate the content, what we're going to talk about as to why you need to protect and hedge against inflation. Okay, so a very quick one about what inflation is, right? It's actually happening every year, and whether you are aware of it, you are also affected by inflation. Okay, so to give you a very simple understanding, in terms of a layman's way of explaining it to you, inflation is basically when your value of a particular asset, in this case here we're talking about the dollar, the money, okay, the value of your money is starting to get lower and lower. Basically, we use the word depreciation to describe it. Okay, so the idea here is, of course, for example, okay, in the past, a dollar perhaps is able to get you a cup of coffee, okay? But maybe, down the road, that same dollar here, the value starts to depreciate, okay? Because of inflation, general goods and services, the price of it keeps going up, and if your value of the currency or the money doesn't increase accordingly, then it starts to get depreciated. Okay, so let's say in the past, a dollar is able to get you a cup of coffee. Then with inflation effect coming in, that same $1 now perhaps is only able to get you maybe half a cup of coffee. Okay, so the idea over here is, of course, with the same amount of currency that you're holding, the value of it starts to drop. We call it depreciation, or in other words, it's the effect of inflation. Okay, and that's why sometimes you hear people saying that if you put your money at the bank, you're actually bleeding slowly, you're losing out to the effect of inflation. Okay, and in this video here, of course, no matter where you are based in, whichever country you are affected by inflation. Okay, but this video, the context, we're going to talk very specific to the US dollar. Okay, and that's why I want to bring out what is the US money supply. Okay, if you're not aware, of course, in 2020, the Federal Reserve, which is the central bank of the US, has been printing a lot of money with the objective of stimulating the economy, right? In fact, globally, most of the central banks are doing that. But more specifically, we are talking about the US dollar because it's still right now holding the status of a global reserve currency, and today global trade still revolves around the US dollar. Okay, so this year alone, right, end of 2019 to where we are right now in 2020, okay, the US money supply has increased. Okay, the money supply over here has increased by more than 20%. Okay, in other words, by the end of 2019, right, in a very simple context, at the end of 2019, let's say you have 100 million worth of US dollar currency floating around globally. Right now in 2020, that quantity increased by 20%. Okay, so I want you to think about it in terms of going back to inflation, right? When there's a huge supply being injected into the economy, the supply increased, but perhaps the demand can't catch up, right? So when that happens, what will be the effect of it is that the value of this, because of supply going up, right? The value of the dollar, the value of the USD will in fact be devalued. Okay, because of the increase in supply. Now, of course, to date, we haven't seen the US dollar drop by 20%, okay? Because if you put everything in constant, if let's say the supply increased by 20%, the demand stays the same, then of course, we will expect, the equilibrium of price, it will drop by 20%. But to date, we haven't really seen that, okay? But it's very important why I want to bring this number out, okay? Because this is historically one of the biggest increase in money supply since historical, okay? And that is significant because moving forward, going into 2021, going into 2022, the question now is how can you protect yourself against a potential inflation, okay? And the worst case can happen over here, of course, is hyperinflation, okay? So if that's going to happen in the US dollar, then it might affect globally as well. Okay, so today you might want to start thinking about understanding inflation, okay, thinking about how you can actually hedge against inflation, how to protect yourself against it. Okay, and that's the reason why I'm producing this video here, to give you that knowledge to help you be prepared. Okay, so the idea then is that to give you a much better understanding of how inflation is going to affect you, be it from the perspective of even a trader and investor. Okay, I'm going to give you two case studies over here, right? Assuming you have an asset A and of course asset B. Okay, so there are two case studies over here. And the dollar sign here simply refers to the currency, the value of the currency. Okay, so in this case, we're definitely talking about the dollar, right? So now let's say assume asset A. Okay, and let's say the asset A here, you're also holding on to, let's say, cash in terms of the US dollar, right? So if today, okay, the dollar currency starts to depreciate, perhaps the supply is oversupplied, the demand can't really meet it. People realize that the valuation of the dollar shouldn't be so high, and it starts to devalue. Okay, and let's say because you're holding on to it, the value of this drops, your asset also drops in terms of value. Okay, and of course over here this also drops, right? Okay, so the net effect of course is then dropping here, right? So now let's say this drops by 10% because of inflation. The dollar value actually devalued by 10%, then your net drop here is also going to be 10%. Okay, which means you did nothing. You just hold on to the dollar cash in whatever account that you have. The value of it will depreciate by 10%. Okay, that's what it means. Now, in the other context, now let's say you have asset B. Okay, so asset B here, of course, I'll share with you in a moment. There are various assets that you can protect yourself against inflation. But let's just say one of the very common one here is gold. Okay, which is an inflation hedge asset. Okay, and now let's say because right now gold is still traded mainly against the US dollar. So when the dollar starts to devalue, naturally what will happen over here is the price of gold will start to relatively increase in value, increase in price. Okay, and now let's say we give a number to it, right? So let's say the dollar depreciate by 10%, and of course we don't expect the gold to appreciate more than too much significant right now. Let's just say gold actually appreciates by 12%. Okay, so it went up by 12%. So you realize that net over here, of course, you still lose out in the inflation effect of the dollar, but you actually gain from holding on to the asset. So you're actually taking your dollar, transferring it, and exchange it for another asset which increases in value. Okay, so over here you see that net itself, you actually gain a 2% from your entire value, entire capital. Okay, so from this two case study here, what you actually observe is today, if you are not protecting against inflation, okay, you are subjected to the effect directly. If let's say inflation is happening, the value of the currency starts to depreciate, your entire portfolio is going to be affected, right? Your net worth is going to be affected. But if today you are able to hedge it, okay, you can not only protect from it, but you are able to capitalize on it and perhaps even grow your wealth, make some profits from it. Okay, so over here, I'm going to give you some general idea as to what are some of the assets that are commonly used to hedge against inflation. Okay, and of course, if you would like to really go into it, you need to definitely spend some time to go and research as to what are this. Okay, but today's video here, I'm giving you a big picture. In the subsequent videos, I might go into individual assets over here to give you a much deeper understanding, and even sharing with you some of the ideas of how we can trade, invest, capitalize on it. Okay, but the broad picture over here, of course, you have various assets you can consider. For example, gold, okay, which is one of the very common asset that we use to hedge against inflation. Of course, over here we are also talking about precious metals. So whether it's gold or is it silver, they do have that same impact. Okay, and the blue color one that I wrote is GLD. This is actually an ETF. So for those of you who are considering gold, right, of course, you do not want to put your money at CFD position because you need to pay commission and you pay swap. There's a certain cost in it. Okay, but today if you're looking to hedge against inflation, then it's not a short-term trade, it's more of a longer term. Maybe your duration here, your horizon is about 1 to 2 years. Then you want to consider an ETF. Okay, and that here you need to consider perhaps GLD, or in terms of silver, it will be SLV. Okay. The other asset is of course commodities. Here we are talking about general commodities like wheat, sugar, iron ore, copper, right? They do have the effect of hedging against inflation, protecting you against inflation as well. One of the ETF that's very common here is GSG. Okay, so commodities is something that you can also look into it. If today you have been following us in the eSmart Mastermind, you will know that my focus have also starting to emphasize a lot on commodities. Okay, so that's also why the reason right behind as to why we are now shifting our focus towards commodities at the same time. Okay, of course, the other asset here that is very popular is stocks. Okay, and if you are talking about US, then we are of course looking at the US stocks. Why I say stock, or why stock itself is also an asset that's able to hedge against inflation, is because when we talk about money flow, okay, one of the videos I talk about it as well. When you talk about money flow over here, is that every assets are actually competing for funds. Okay, and as from an investor point of view, you want to allocate your funds towards asset that tends to perform better. Okay, so during such situation where there's a very high likelihood of inflation or even hyperinflation, then majority of the investors would start to see how they can deploy their cash to certain asset that tends to perform better from inflation, right? And stocks became one of the popular assets. Okay, and of course, one of the very popular ETF here you can consider is SPY, right, which is the S&P 500. Of course, you can also look into individual companies. Generally, the idea here is that looking into the stock market, deploying your cash into it, such that if let's say the stock market rally by 20% and there's a devaluation of a currency of let's say 5%, net you actually gain 15%. So that's the idea from it. Okay, of course, you can also look into real estate. Okay, and in this case here we're talking about REITs. One of the ETF you can consider, of course, is VNQ. Okay, but for me personally, I'm not very involved in REITs for my personal reason. Okay, I don't really have want to put my money and investment into the real estate market or property market. Okay, so most of the time I don't really look into REITs, but I want to share with you over here that REITs is one of the assets that you can also hedge against inflation. Okay, and the other one here, this one here is uniquely in the US. Okay, of course, all this here can be applied to any country. Okay, today we are talking about Malaysia, Singapore, Thailand, Philippines. If there's inflation, this asset tends to also protect you. Okay, but TIPS is actually a very unique asset in the US. Okay, it's actually a US Treasury bond. Okay, but this Treasury bond here is based on inflation. It's basically tagged against inflation, with the main objective of just purely protecting you against inflation. Okay, so it's one of the, I would say, safest, lowest volatility asset to consider. Okay, which means that likely you will not really be able to profit out of it. Is purely from a protection point of view. Okay, and the last one over here that I put in red in question mark, of course, is right now. What inspired me to do this video over here is also because there's a lot of media, a lot of news, a lot of discussion starting to talk about cryptocurrency, and particularly Bitcoin, right? And over here, the question is cryptocurrency potentially gonna be an asset that's able to hedge against inflation, or perhaps even an asset that's able to not only hedge but also profit from it? Okay, so it's a question mark over here in terms of, okay, I'll just put this as BTC, right? Bitcoin or crypto market, because again, it's a fairly new market. Okay, but the opportunity is definitely there, because right now a lot of large speculators, banks, even fund managers are starting to pay attention to it. Okay, and when they do, okay, that's where your funds money flow again, right? That's where your funds will start to perhaps go into this asset. And again, demand and supply theory, when there's a lot of funds coming in, the demand increase, there's limited supply, you know what is going to happen in price, right? It's likely going to skyrocket. Okay, so the idea again is we are definitely also shifting our focus towards some of the potential over here at BTC and Bitcoin cryptocurrency. Okay, but the idea, of course, is not telling you to go in all of it right now. Okay, the idea of this video again is to give you an introductory understanding as to what inflation is, how to hedge against inflation, how to protect yourself, to give you an idea of what are some of the assets that you can consider. Okay, and perhaps in the subsequent video, we're going to talk about more in-depth details about all this asset and what price at what particular time are we looking to get it. Okay, so I hope this video here is clear to give you some perspectives, some insights into what inflation is, what inflation hedge is, why is it so important for you to start thinking about it, especially moving forward into 2021, 2022. Okay, and of course, if you benefited from this video, you learned something, I would appreciate you can actually share your learning at the comments below to keep the discussion going. And of course, if you haven't liked, subscribe, and click onto the notification button, do so, okay, so that in the future when I release a video, perhaps a series of this, you'll be the first one to be notified. Okay, so with that, I'm gonna see you in the next video series.